Let's talk about the biggest topic on everyone's mind right now in real estate, affordability. I'm Ryan Rice with Rice Properties Group.
Dave Faber, George Mason Mortgage.
We just had a great lunch here in Vienna and decided to come give you real talk about what's going on in the market today. Our buyers are freaking out, quite frankly, and being the experts in our fields, we wanted to bring to you big topics on people's mind, on purchasers' minds right now about the market and what's going on. And the number one topic is affordability, right? Interest rates have just surpassed 7%. There has been a price increase over the last year in our average first-time home buyers, somewhere between $400K and $700K. That's $50,000 more expensive right now to purchase a home in that price point now. And our buyers, we're having the same conversations, both Dave on the lending side and me on the real estate side. There's concern. They're trying to figure out how to best purchase a home in this market. And they may have been on the market looking for homes 3, 4, 5 months ago, may have missed opportunities, or may have just said, hey, I don't want the competition now. And now there's, okay, well now we want a house, but the affordability is getting uncomfortable for many. And so we're here to talk about what we can do to combat that, right?
Sure. Absolutely.
So, Dave, do you want to give us an example of a conversation? One of our clients, wants to buy a $600K home, right? Say, hey, I'm going to wait for the price correction or the interest rate correction, wait for it to go down, maybe talk about some options that are available now.
Yeah, for sure. I mean, look, we're not going to sugarcoat it, right? Interest rates are high right now. There's certainly a couple of ways to offset the high interest rates. Adjustable rate mortgages, ARMs, everyone's heard of those, where you've got a fixed interest rate for a period of time, taking a little bit of risk from the lender, so they give you a lower rate, and then your rate is adjustable after 5, 7 years, depending on the term of the adjustable rate mortgage. And a lot of people are going to refinance those interest rates that they take out on their home in the next couple of years. So,
and even if it's your forever home, you can refi out of that in a few years.
Don't steal my line, but yeah, for sure. I mean, look, here's the deal. There's a couple of products out in the marketplace here that we use to offset the high interest rates. Adjustable rate mortgages, ARMs, everyone's heard of those. Taking a little bit of risk from the lender. Your rate is fixed for a period of time, and then it's adjustable. Not everybody's comfortable with that, but because of the high rate environment that we're in, most folks that take out a loan now, whether it's a 30-year fixed or a 7 or 5-year ARM, are going to refinance. So why not have a lower payment for the next couple of years?
Sure.
In addition to ARMs, they've got unique products in the marketplace, like what we call buy downs. 2 years and 3 years, your interest rate will be reduced and then will raise after that initial period. There's also folks that'll pay points, so it's an upfront cost to take on a lower interest rate. So there's all kinds of tricks that we can sort of leverage in this market to reduce the interest rate. But is that the only factor to consider here? Should I be waiting for prices to go down?
Prices aren't going to go down. Over the last couple years, we've seen anywhere from 10 to 18% increase in prices. A lot of this is supply and demand, right? So there's still a listing shortage right now. So what that does, if a home is priced right and shows well, they're still moving quickly off the market. But some of these buyers that are waiting for a deal, and sure, it's situational. So there could be a deal out there. It just depends on the motivation of the seller. There is not going to be some major price correction. It's predicted next year in 2023 that we will see anywhere from 2 to 6% increase in the cost of homes in Northern Virginia and the DMV area, and that surrounds us. So it's going to be more expensive to buy a house next year.
So if I'm hearing you correctly, if I wait until next year, prices might be higher than they are now. Is that fair to say?
That is fair to say. And also, the interest rate, if it does come down next year at some point, all those buyers that were in your competing pool over the last months that are not as much competition now, they're not going to be there.
Well, let me side with that, because I think that might be the biggest point to sort of talk about. I mean, over the past couple of years, you and I are both fighting tooth and nail to work through a completely different market, and the attributes of the market that we had to deal with that were the hardest was the competition, right? So yeah, rates were extremely low, half of what they are now, but the buyer pool on a given property that I'm submitting an offer on was tenfold.
Oh my goodness, yeah.
Right? I might be competing against 10 to 15 people in 2021 and 2020 for the property that I want, and therefore I might have to make an offer that's $20, $30, $100,000 over the list price, and I still don't know if I'm going to win it, right?
Right. And with no contingencies, mind you, last year, no home inspection, you'd have to waive everything to win and go way over, and sometimes we'd still lose $20, $30, $50, $100,000 over that price, that list price. And now what we're seeing is we're able to negotiate more, and though
protect ourselves, right, with buyer contingencies.
Absolutely,
like you said.
Home inspections are coming back. Seller subsidy, we have been getting seller subsidy, which is the contribution to buyers' closing costs from the seller.
And we've been leveraging the seller subsidy to either pay points to lower the interest rate, to leverage the buy down product that I mentioned. And so the fact that you're able to use leverage that you did not have over the past 2 years is sort of offsetting the rates, right? The rates aren't going anywhere in the near term. A lot of people believe that Q1, Q2 of next year, they'll start to come down. If you're sort of watching interest rates, the leading indicator is going to be inflation. If inflation starts to come down, you're going to see rates start to come down. A lot of people believe that we're going to see that relatively soon. Not today, but it's coming. And so do I want to operate now in an environment where there's no competition and take the hit on a higher interest rate? Or do I want to wait a year or down the road when rates may or may not be lower, but prices will likely be higher?
And competition can be different.
And competition will be higher.
So that will then obviously supply and demand, right? So that the more competition, the higher that price on a fresh listing is going to go.
Do you think buyers were having more trouble over the past 2 years with making offers that are, again, $100K over the list price and waiving all of their contingencies? Do you think they were feeling that more?
So that's a great question.
Right now than the rates?
That's a great question. I think when our purchasers, our buying clients would call me and say, hey, Ryan, we found a house, and we kind of look at it with like quick look and say, hey, we want to go 50K over. It was different, right? So like now it's like, oh, we have this home. It's been on the market. Let's say it's been on the market 18 days, which 18-day old home wasn't like that 6 months ago, 8 months ago. No. And now there's like a hesitation, right? There's like, I love that house. The interest rates are over 7%. I have the money. I know I want a house, but somebody wouldn't hesitate to go $50,000 over a house and say, hey, no home inspection. I'm going to buy it. What I see is what I get. And, like, oh, free rent back? If the seller wants to stay there 60 days, the max, yeah, sure.
No home inspection, no appraisal protection, no protection against potentially my financing falling through. Like, those are the things that people were willing to do 2 years ago and last year even, but now we're worried about rates. I mean, here's the thing about rates. They're gonna come down, and we can wait for them to come down, or we can just refinance when they do come down, right? And the penalty might be that I'm gonna pay as much as a couple $100s on my monthly payment for 12 months, 15, 18 payments. But at the end of the day, is that better or worse than paying $50K over the price of the home to win it? I mean, here's the deal. It's never gonna be a perfect environment to purchase a home. There's always gonna be things that you're gonna have to navigate around, and there's always gonna be challenges, as you know. It's a completely different market now than it was 2 years ago. But at the end of the day, the best time to buy real estate is right now and 20 years ago. It's always been a great investment. Home ownership has always been the American dream. And I don't think anything's changed just because interest rates are temporarily high at the moment.
If you're looking to buy a house right now and it's your dream for home ownership and to invest in real estate in the DMV area, do not let the interest rates hold you back. Monthly, we have a real estate meetup. Information is on our website where you can register and be a part of this, where we take deeper dives into conversations like this and help educate you, because we're the soldiers on the ground right now with this snapshot of the market. We'd love for you to join us. Appreciate you guys listening.